Hello everyone, it's Red with RedDragonLeo.com. It is Wednesday morning at 8 a.m. before the market opens. Didn't have a chance to do a video last night, sorry about that, or a post. Been a little busy. Anyway, I just thought I'd do this one to kind of give you an idea of what I'm thinking. Not that it ever works, but we try. That's all we can do. So anyway, here's the weekly chart, and you can clearly see we so far in the week by Tuesday we put in this nice red topping candle from this previous 1, 2, 3, 4, 5 weeks. We had that big up week, and then we had down for 3 weeks, and then that fake out move right there. That to me looks very, very similar to this pattern. Let's see, where was it? Right here. This pattern right here, where we went down. I think this was the pattern I was just looking at. Let's see. Yes, this is what, where we went down a few weeks, then went up, then had a down week, which is what I expect for this week. I kind of expect it to kind of look like that, and then the following week possibly down and turn and reverse back up, because you're getting closer to options expiration, and so they're going to trap in some of the bears. So that would kind of imply this week being down and next week being down a little bit more, and finding either that 1173. If it only hits 1173, then this week here might not have this long tail down. I mean, talking about next week. But if it goes a little deeper, then we might hit, like, say, 1150, even possibly 1130. I don't see it really going down that low, but I think 1173 is definitely on the cards. And then the following week being up to end out January, and then starting right off the bat in to end out February. I'm sorry, to end out December. Sorry, and then this big red candle would possibly be going into January of next year, and that's just a possibility scenario. It may not go down like that if the top is still not in. If the top is still not in, then what we could see, and we still have that fake print on the diamond spider trust of 118.16 to go. So possibly it's more likely, because these patterns never repeat exactly. So possibly we just go down maybe to, like I said, 1173, 1150 area, and then go up into the remainder of the year, and then maybe chug along until we finally get up, maybe a little later into the later part of January, maybe close to the end of the month. We finally get up there and hit that fake print by 11,800 on the Dow. It's about 1260 to 1280 range here, and then you start to have moves down like this. But I'm still in the camp that says basically that's the final high. I really do think that that's the final high. So anyway, that's just kind of a guess on what I see coming in the future. It's just a guess, of course. But it would make sense with this here histogram tower slowly working its way down, just putting in lower bars, lower bars, lower bars, and slowly, and then throughout the month of January, barely staying above the zero line, similar to what we had right here, where we thought it was just going to roll right down and go, below zero, and it didn't. Instead, it just kind of hovered there and slowly creeped its way up, and finally had a little sell-off. So we've got to give this thing time. We have to give these moving averages time to where they level off and finally roll back down for good. And we want, at the same time, we want the monthly to do the same thing. And you see here in the monthly, we did, off the big sell-off in 2009, have the 20 period moving average crossover, and it's not crossed back over the 50 yet. It's headed up, but I don't think it's not going to make it. it's going to roll back down too. But what we really need is, you know, is for this to slowly get closer together. And when the 50 finally crosses over the 200, which at the rate it's going, you know, could be anytime next year, late next year. When that finally happens, I mean, that's when the market's really going to get ugly. I mean, because look how close they're getting right now compared to all the past movements. I mean, look how far away they were here. When this thing finally does it, this tells me that towards the end of next year, this thing is just going to be really ugly. Now, same thing here on this. We're going to have to see smaller bars each and every month until this thing works its way down to below zero. Now, so during that time period, that means January and February and March, first 3 months, they might start to slope down and go lower, but that doesn't necessarily mean it's going to be the huge crash that we're looking for. From the looks of these monthly charts, it's more likely to be just a start of a move down, and it might take until the last half of depending on how long it takes for this to get to zero. It really might take all the way up to 2012 before it finally crosses down into the zero mark and then down into negative territory. We just don't know yet. I mean, this is, you know, obviously just guessing, speculation on how long it's going to take. But you can see that here, when it finally did cross over down into the negative, when it finally crossed over, it let's see, boom, it had already bottomed out at that point and then had this little B rally, and then finally took its C rally or C sell-off, or third leg or fifth leg, or whichever one you call it. I guess it's 5 legs down because there's your fourth wave. So it took its third wave and then fourth and then fifth. So this kind of tells me that certainly I think January is going to be a sell-off, but late January, February, I don't think that's going to be the big one yet, though. It might be like this move here, similar to this move, which is a nice one. But I think for us to have this one here, I think it's going to be later next year, or even possibly into 2012, depending on how long they stretch this out. So we'll have to see. So anyway, getting over to the daily chart here, we can clearly see that we had a nice topping candle pattern here, which if we look back at previous ones, we had a topping candle there, and we did sell off the next day, and then chop, they finally recovered it and pushed it on higher. Being that we are in light volume again with Christmas season, this very well may be similar to what we have. You know, you topping tail here, you go down here to as low as here. So, but I think it's going to go lower than that this time around. I don't think it's going to stop right there. I think basically we're going to go down to, I think a reasonable assumption is almost guaranteed 1200. I mean, that would just be crazy if we did not make it down to even 1200. But we should at least make 1200, maybe bounce off that blue 20 period moving average, and then it's just up to them on what kind of you know, how many people they want to steal money from, basically. It depends on how many calls there are out there. How many people are long the market. If there's a lot long, then they're going to take it down a little deeper to, say, the 1173. I don't know if we're going to get down to 1150 area. You know, really don't hold my breath on 1130 because, again, it's Christmas. It would be a shocker if we seen that. But certainly we should go down to this 1200, retest that, and then possibly 1173 to get all the call buyers out. And then if they want to take it out the rest of the year and churn a little higher because it is Christmas, that's fine. So you can kind of expect to move down this week and next week, and then the following week going into OPEX you should see a rally if they follow the same pattern that they have been, which is trick all the bears, going into OPEX, and in the last week jack it up and rob them so they don't have to pay them on their puts. But they got to get the call buyers out now, because I'm sure they swept a lot of puts right here. A lot of people was going to go short. Everybody had their stops above here. And you know, we can look back and see if this is a common practice to pierce up above it and then totally reverse. So look back here. Remember this? They did the same thing here. They chop, 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 and then boom, went up here and did a stop sweep. As everybody, they put their stops right here, just right above this area, and then boom, took her down. As you can see, so this is a common practice for them to pierce up above. I'm surprised they didn't do it here. Just didn't have the gusto, I guess, to do it. But it is a common practice for them to do a stop sweep up above and then reverse course. So clearly, looking at this, we are headed down here. Of course, that doesn't mean anything. You can just chop sideways and we can not go anywhere. But I still think that we're going to go down to at least 1200, probably 1173 area. So I think this is going to roll down for the next few days and dip back below here and recycle back up for the third week, which is OPEX week, and then they'll have their rally into the end of the year and into January. So as for the 60-minute chart, it's a little bit oversold here on this, but on the histogram bars, but not at all on the MACD bars. As you can see, they're still way up here at 5.0. They could go all the way down here to negative 7.5. So that means this could go really deep, and it is still pointing down here. So if anything, we're still overbought on the MACDs on the shorter time frames, the 12, 26, and 9 period, and up here on the longer time frame of 65, 90, and 12. As you can see, it is still pointing up. As I mentioned yesterday, that we could possibly go up, although I did call for a down day. Although this was not what I was expecting. I was expecting it to roll over and be a down day, not pop up, gap up, and then be a down day. So yeah, it wasn't exactly what I was expecting, but I did think that there was a possibility based upon the 60 yesterday that it would pop up. And what I was looking at was this right here, which it tells you how weak it is, because it didn't even go up here and put in positive histogram tower. It just kind of went up on that pop and then pretty much chopped a little sideways and then dropped into the close. So that tells you how weak it was. And as you can see, I think this is going to start to roll over today, and we are going to go down. I don't think it's going to go below zero. I think it's just going to dip down, recycle back up into the end of the year. And I think this, of course, will go down as well too. And we can see here on the ADX how overheated we was, and that obviously is going to have to come down out of the sky. And it'll probably come down, and these will probably meet each other. You might get a bearish cross. Depends how long it takes. And 1 week to 2 weeks, but after that, the bearish cross, I think it'll turn back positive into the rest of the year. On the 30-minute chart, same thing. We're still overbought, not oversold. We're at 2.5 positive, so we can go all the way down here to negative. And we are getting close to a bottom here on the stochastics, but there's no sign of turning back up just yet. Remember, it can chop around there a while too, just like it does here, as this works its way negative. So again, same thing here. You go down here, 1200 your support. After that, your 1173 is your support there. You also have this horizontal line right here at 1180. That's a possibility too that it could go to. But we just got to take it one day at a time for now. Yeah, there's a perfect example when I was telling you about them crossing. They'll just crisscross a little. So a 15-minute chart, you can see this made a kind of a MA pattern. Here's your left side of the M, the center point of the M, the right side, or the right side right here, and it went down. It didn't really make the A, but if you count it from here to here, if we go up today just a little bit, then the move down should be complete the A side. Okay, guys, that's it. See you guys. Good luck.